Welcome back, everybody. So I was running through backtesting and I was going through futures gold. Now, you know me from my previous video, I like to have specific sessions in which to trade, purely because they're times in which there's movement, but also it avoids the heavy volatility that you get generally with, say, a US Open. This particular trade that I saw on the backtesting, I really wanted to show you guys particularly because it shows the strength of Spidaro. The reason why this was so important was because if you look at the way it traded, it was a heavy downturn and a breaker structure to the downside. And a lot of indicators and a lot of programs out there would have turned around and said, it's now a short, it's failed to hit the top. I ran the charts through Spidaro and it actually recommended a long based on previous structure, previous candle patterns, previous price action. And normally when it gives me an entry, it can be not a huge difference, but a bit of a distance away from where price is at the time. In this occasion, it was actually pretty much a couple of ticks either side. I can't remember exactly which one. Ended up taking a $1,500 3-to-1 win. And what I wanted to do was just kind of go through picking out the trade, picking out the highs and lows, the reason why this was so important, when it broke, how it broke, and the fact is, even though to the naked eye it looked like it was going to be going down, Spidaro still recommended a long, which in the end was profitable. If you're doing a 50k account combine, you need 2 of those and you pass the challenge straight away. But I wanted to go through, show you exactly its reasonings, its thought process, and the trade itself, so you can kind of get a better idea on how and why this is a really, really cool tool for working with you. So yeah, let's run to the charts and show you what it's going to do.
Okay, so now we're back with Spidaro. Today we're obviously going through futures. So what we're going to be looking at is a gold trade. We're going to go through 2nd of September, and so what we're going to do is select gold here. We want to go scalping. Now my preferred risk reward again is 3. I know you can go 1 to 2, but generally speaking, a 1 to 3 just gives you a bit more breathing room. You know, there's 3 losses you can effectively absorb by a good risk reward ratio. But again, this is where backtesting does come in and become quite handy, because what you're effectively looking for is whether or not a 1 to 2 is a higher win rate, or whether or not a lower win rate, but you still take more profit from the fact that you're taking 3 for every loss. Now, one of the things I'm going to suggest here, look, on this list, these are all full contracts. These are minis. I would seriously suggest making your risk 500 on the minis, because it gives you enough breathing room. If you're going at 200, 250, all you need is a tiny bit of volatility and you're taken out of the trade straight away. So give yourself a bit of breathing room and take 500. If for whatever reason your account balance or the combine or funded account is not at that level that you can absorb that kind of loss, drop down to the micros. I'm going to be adding the micros to these very shortly. So by the time we release this, you're going to have the micros option there, and you can trade 2, 3, 5 micros there. So then your max risk is going to be 250, but you're still keeping the same level of distance away from yourself. I will add the micros in there anyway, because price action does work just slightly different because it is a separately traded entity. But what we're going to do is we're going to go to the charts now, and we're going to draw out our highs and lows, and then let the information and then let the price action play out and see where we end up. Okay, so here we go. We're on the 5-minute chart. Now what we're going to be doing is marking our highs and lows. So high is very clearly up here, and what we're looking for is the right low. There's a number of points we could argue that could be it. One would be this range here, but that is quite far away from our current price. For me, the low I'm going to be putting is right here. Reason being is there's a little bit of consolidation. There's high, you could say that is the start of the movement upwards, but that is the start of the impulsive bullish move. And so that's what we're looking for. It's a difference between where the move up or down starts to compare it to where a impulsive or strong move starts. Normally when an impulsive move happens, that means there was a great deal of liquidity, and that is a point of interest. And if you do draw a simple line where we've actually put that, you can see that price does reject many times off of that area anyway. So we're going to run the market now, and we're just going to see how price action goes. Wait for it to break the higher low, see how it breaks that higher or lower, and then we look at bringing Spidaro into the conversation after that. So let's play around and see where we go. Okay, so we broke the low, we barely broke it, retrace back inside. That is not a valid low for me, but I'm going to move the low there anyway, because that has become an interesting area. Again, now we've got an impulsive low. That is a big break. There is a big wick here, but for me, that is enough of a movement that is right for us to take it to Spidaro. Okay, so what we're going to do is we're going to move to the 15-minute chart. We're going to just take those two lines off, keep everything clean. Double click here on the scale, and that just automatically resizes everything. And drag this across as far as you can to include as much price action. Ideally, what you want to see is enough for candle, enough price action, enough of the wicks, so that Spidaro can make a proper understanding on this. So as before, what we're going to do is you can come up here and copy image, or you can Control-Shift-Save, Control-Shift-S, which is what I like to do. So we have all our settings already put in here, so we're just going to paste it. And we're going to come down to the 5-minute. It's automatically resized it anyway, so we do the same thing again. And then we come down to the 1-minute. And Control-S and paste it. Now we're going to run the analysis, and let's see what result comes back. I'm going to pause the recording now. Whilst it does its testing, like I said, this is a test server, so it takes 30 to 60 seconds to do the analysis. Once it's done the analysis, I'll come back and we'll run it on the charts and we'll see how we get on. Okay, and we are back. So we have an analysis set in. So it's recommending one contract. Clearly, it's only a $500 risk, so anything more than one contract would be quite ridiculous. We have our entry point here. It's actually recommending a bullish move, purely because of obviously the rejection after breaking it. So the market structure is stating that the 15-minute shows a clear uptrend, higher highs, higher lows, no higher time frame bearish breaker structure, and the current pullback is to a demand area. So it's recommending a bullish move from there. It's saying the time frame bias shows a fast sell-off into consolidation area. 1 minute's trending down, but approaching a demand. So there's a wick absorption or high low for timing, only to refine entry, not to change the bias. So this is the key reasoning. There's no higher time frame breaker structure. There is an entry refined at 5-minute demand with 1 minute confirming it. The lower time frame momentum can delay entry but not flip the bias. So obviously here's our invalidation rules. There is a plan B here, but I kind of like what it's saying here. So our entry 3542, let's put the entry into trading view. So quite an aggressive move. Let's move it to the 5 minutes, quicker to move it there. So 3542 is our entry. So it's literally saying is we're at a demand area now to almost get into the trade now. So let's get in 3542. No. Bloody mouse is not playing ball today. There we go. Right, so we want a buy stop, and we confirm that in place now. So let it. Next candle is going to tag me in clearly. Okay, so the stop is 3537. Quite aggressive. So we're there. So we went into a bit of drawdown. We've actually come back up again. And our take profit, we're going from 1 to 3, so it's a $1,500 trade. So I don't need to see the take profit. But you can see 3557 and 3557. So we're going to confirm it, and let's just see what happens. Okay, so we did come close to taking ourselves out, but we are back in profit now. Now, the argument you can always say here is, look, I'm at halfway, that's 750. Depends what your tolerance for the trade is, or tolerance for losses. You can always move yourself to break even if you want. Again, this is stuff you want to back test. Sometimes moving to break even, especially on something like gold, which can fluctuate, you need a good bit of breathing room. You may find that you get taken out more trades, but then obviously fewer losses. But then you're going to get fewer wins potentially as well. So let's just see what happens. I'm going to leave this run. Nearly got taken out, actually, if you were break even. So we're still breaking up. We're consolidating a little bit, but looking nice. I think we're going to break it. Close, so close. And oh, there we go. And we've broken it. So that is $1,500 trade on Tuesday morning. Nice and easy. Trade was what, 3-4 hours long. Just leave it to run. Like I said, you can manage the trade however you want to do it, but generally speaking, I like to leave things running open. If I'm doing a 1 to 3, I normally let myself go into 2R before I go into break even. Like I said, especially with futures, because futures is volatile in its very essence, so it can take you out and then run back up. I've had it so many times where I'm taken out for break even, and then the trade go off and become profitable. It's just a case of, look, you're never going to win every single trade. You're never going to go out there and be 100% win rate. There are going to be losses, but it's a case of risk to reward. If you're in a funded account and you have a consistency rule, okay, take the trade, take the win. If you're in a combine, you can take the risk, leave it to run, let it go for the 1 to 3. If you're doing a 50K challenge, you need 2 of those trades, and that is you passing that challenge. Only 2. So it's the right idea. But again, if you're trading your own personal funds and money is tight and you've only got a small account balance, again, maybe then be a bit more aggressive with the stop. But generally speaking, I like to try and hold the trade open as long as possible. And then when we're close to profit, just in case it's a stupid reversal, then I'll move my stop to break even. But that's futures. That's the gold futures trade. Now, this does need manual intervention. There's no such thing as an automated system. If there were automated systems out there, making money, 1, why they're selling it, but 2, everyone will be doing it. Everyone will be millionaires. You can't have a fully automated system here. So what I'm trying to do is I'm trying to make things as simple as possible. Wait for a break of the highs and lows. But what kind of break? If you've got an aggressive break, or is it a rejection? As you can see with this break, when we put the entry in, it did break impulsively, but it left a strong wick. And Spidaro spotted the demand zones, and went, actually, do you know what? There's a lot of people going to be going for shorts here, but our reasoning based on historical analysis and how we read the charts, we're recommending a long. And look what happened. You're $1,500 up now from that. So that's everything from this, guys. If you have any questions, any comments, thoughts and feelings, but don't forget to like and subscribe. Any comments, any questions, if you'd like to know more, visit spidaro.com, spidaro.com. Put your details in there if you want to know when we release this. We're hoping to release this at the beginning of January, but we'll email everybody who has an interest in learning more about this. We'll email you when it's live, and then you can sign up. 7-day free trial. Get in there, start playing around. As you can do, back testing with bar replay, and you can also forward test as well. Thanks very much, guys. I'll see you on the next one.